Initial Bakwas. Today we will discuss about the mid cap and small cap funds. So always mid cap and small cap funds cannot give you good returns. Look at nowadays for large cap funds. As you know that the market is down and valuations are high in these segments. So there are several risks and the scope for upside is quite limited. So even if the large cap oriented Sensex is 8% away from its all-time peak, the BSE mid and small cap indices are inching closer to their respective all-time highs. In fact, on a 2-year basis, Sensex has generated an absolute return of just 31%, while the mid and small cap indices have generated absolute return of 88% and 99%. So there are several reasons for the disparity. First, mid and small cap were underperforming large caps for the past 2 years, and they are catching up now. So second is foreign portfolio investors mostly hold large cap funds, and their recent sell off impacted the large cap space the most. The third reason is the historical return chasing mindset of the Indian investor. So, despite warnings, Indian investors continue to pour more money into schemes that have generated good returns in the recent past. So, since the mid and small cap schemes are faring well, there is a greater inflow of money into these funds. So the buying support from mid and small cap dedicated funds is supporting the segment from falling right now. Through this may sound like a virtuous cycle. Experts warn that it may not last for long. It is time to be cautious. Give the expensive valuation of mid caps. Uh, Given the expensive valuation of mid caps, at current valuations, we believe that mid cap stocks are relatively expensive. If you are looking for undervalued stocks, there are far more opportunities in the large cap space. So 2 years back, the mid and small cap indices were quoting at 30% and 31% discount to the large cap index. Now both these indexes are quoting at a premium of 11% and 15%. So with the risk increasing, experts are advising MF investors to take a break from their mid cap addiction. So mid caps used to quote a large discount. Now it is not so. So there is no reason to rush into the mid cap funds now. Investors should not pour money into mid caps unless they have a large investment horizon. So size matters. With more and more money flowing into mid cap funds, some of them have grown to unwieldy level. For example, the AUM of HDFC Mid Cap Opportunity Fund and ICICI Pro Value Discovery Fund is above 10,000 crore rupees. Through both schemes were able to generate better than category average returns in the 3 and 5 year period. They have underperformed the category average in the past year. Investors need to be cautious of the fund size. Unlike the large cap space, there are not enough good mid cap stocks. So if the size becomes very large, the fund manager will end up buying the low quality stocks or buying the same high quality stocks more. So due to paucity of high quality stocks, the fund manager of a large mid cap fund may even be forced to invest a part of the portfolio in large cap stocks. So reducing the potential return. This is evident from the fact that 4 out of 5 high performance in this space in the last 1 year are funds with smaller AUM, means less than 1000 crore of rupees. So fund houses are well aware that smaller funds are easier to manage. So mutual funds usually try to circumvent this size problem by coming out with a series of closed and mid cap and small cap funds. Such measures, however, will not solve the investor's problem, especially if the small schemes you invested some time back has become very large now. You don't have any control on the size of the funds as others keep pouring money into the scheme. So what should one do? If the AUM of the mid-cap scheme are invested in become very large, switch over to another good scheme with a smaller size. So that will be the best thing for an investment in mid-cap and small-cap funds. So thank you.